Welcome everyone to the Kendall Report. What a day, huh? I kind of blew off last night that the JOLTS report was coming out, and that was the only report, but what an impact it had indeed. Interesting factoid, we'll call it, is that if you recall last month, the JOLTS numbers were down right before the Fed meeting, right? And then, interesting enough, the reports were that there wasn't a good participation in the survey. And all of a sudden, everybody participates in this survey after the Fed. Thought it was kind of interesting, the irony of that. And now we're, pushing up over 9 million. I think 9.6 says this huge number. And if you, I don't know, folks. I don't want to go on some conspiracy thing, but really, I mean, everybody knew it was underreported last time. Now it's maybe reported as it should have been, but it seemed to be like maybe the books are getting cooked just for the Fed meeting last time. I think the other thing that I kind of want to bring up here, and welcome, by the way, to the Kendall Report. I just can't believe sometimes what I see with these markets. And I posted something on Twitter the other day, and I thought it was kind of funny. It was a picture of the Kansas City Chiefs. I know this is an odd thing to say, but there was a holding call. Patrick Mahomes runs for like 25 yards, gets a first down, but they don't call the holding call. And I said, is there anything that's not corrupt in this world anymore? And evidently there isn't, because this is just another example of the augos and everybody really driving, the high frequency guys driving this market down. Once again, just wave after wave of selling today. Nobody looking to buy this at all, and printing down into some numbers, down into the extreme numbers that we saw last week, down in this 42 handle, and actually made a new low off of those numbers. So very interesting, I think, just for the record. And I like I said, when's the last time you heard anything about the UAW strike? Haven't heard anything about that, right? Nothing seems, I don't know. It just seems like the news cycle is just really jacked up. Everybody's looking at employment numbers. If you look out there, Fed funds are pricing in no increase in yields, and then you get this stuff come out, then everybody, is pricing things back in, and it's just, I don't know, folks. It's very difficult to, I don't like metrics, and I haven't talked about this for a while, that depend on what other people are thinking, such as like the survey is a bad one. It's never really been a significant one, but now just because of the way this labor sector won't change, I titled this video, the labor market that won't quit. And, it just keeps coming and coming and coming. And, maybe this is one of these phenomena that is going to baffle all of the best market analysts there is. And, what we are seeing now, though, and I've talked about this before, now we're getting double hit. The 60-40 guys are losing on equities and they're losing on bonds. We're seeing the bond yields spike up almost to 480, and they just won't go down either. So we just continue on. I think probably if we look at today's action, S&P down 137, 1.87 on the NASDAQ, Russell down 1.69. 10 of the 11 sectors were down. Utilities was the only one up, but it's been down like almost 14% in the last, I think, seven sessions or less, actually. That thing has just been hammered. So it's no big deal. The other thing is the banks are coming apart. We're coming down and trying to test last spring's lows. We're a little ways away, but there's just a lot of pressure on everywhere you look right now. And, you have to remember also at the last Fed meeting, no recession, I told you that Goldman and all these guys are piling on, no recession, no recession. Now I'm getting nervous. I'm thinking more recession than I have in a while. And I was, like I said before, the guy who said nothing from the standpoint, I said there's not going to be a recession. Now I'm getting really, really concerned. Some of the things I'm starting to see. And you'll see I'll go through the database a day removed, but I mentioned, I don't even remember now, it has to have been a week before last where I said we were going into full liquidation mode, and that's exactly what we've done. So the database is destroyed. The market's got just absolutely pummeled from every angle today. And so a fair amount to talk about, even though we're coming into tomorrow. We got ADP, we got some other things. I noticed I didn't write any of the economic stats down when I was getting ready. I was looking at some other things. So maybe we'll go, we'll talk a little bit more. I have some stats. I can go back a couple of pages on my notes and cover that. Matter of fact, let me just do that real quick. See if I can get to. Yep, I'm not going to find it. So, yeah, so I know ADP is expecting around 150, 160 tomorrow. I don't know. Maybe that number comes in hotter. Maybe Friday's number comes in hotter. I think everybody is really got concerned after this JOLTS number. So it's pretty interesting here. Let me just look here at any other stats that I have down. That, yeah, just really, I think the main thing that I want to emphasize is that these markets are getting really negative. We're almost testing the 200-day moving average on the S&P. You'll see all these numbers. I mean, these are numbers last night that I mentioned in the long-term view, especially on the quarterly, like S1. I'll bring it up tonight, but it was a 41 handle number. I think it was maybe 41.90, but that was basis the cash market. So, you know, we're already printing down in those numbers, and maybe there's an S2 number, and everything's potentially starting to roll over, although I think we're at the extremes. And let's go into the database and get into the technicals and see where we get at. Sorry about that. Sometimes the transition takes longer. Anyway, here we are, 8.86% bullish. So we'll call it like it is. 9 out of 10 stocks are in the neutral phase right now. Nothing is long on a short-term basis. I would completely have puked out the entire database. 544 sells for this morning's opening, only 119 buys. Pretty negative rotation, and just nothing here, folks. I've been talking about it's going to take a while to rebuild. Well, it's kind of hard to rebuild when we're still tearing it down. And this is, yeah, that's interesting. I see somebody's saying Kramer is bearish on bonds. That's interesting. Anyway, but yeah, the database is just blowing out. I suspect if we don't get a big bounce by the end of the week, we could see the intermediate database roll through the 42% level, which then is going to put me on red alert on a lot of things here and start to really potentially get negative overall. Right now, I'm still hanging on, still get that 42% level to break on the intermediate. But for now, we've seen a lot of portfolios move to about 30+% cash over the last several weeks. So the deterioration continues to occur. And, let's go. I'm just going to bring this up for a second here. Is the intermediate database is at 49.41. So if we stay down, like we don't get a substantial recovery by the end of the week, then we're going to definitely be seeing some pretty heavy liquidation in the intermediate models, which is going to start to suggest we're going to roll back on these markets pretty far here. So things go from feeling really good going back a couple months ago, printing up to the 46 handle, to the end of the end, we'll call it, from the standpoint of especially if this database rolls through 42%, and I'm not going to be very friendly. As it stands right now, I mean, we're in protective mode, so we've been talking about the potential of rolling down. I remember too the 40-week moving average, which is very similar to the 200-day. So that has happened on some of these indexes already. And I'll touch on the weeklies tonight just because of some of the things that have occurred. So let's go ahead and get into the S&P. All right, so a couple things here. The algos are suggesting we're going to get a bit of a recovery, but I think we're going to be limited. And we'll look at the market grid for the daily here in just a minute, but we're going to be limited to probably get up around, potentially get up to 4280, which right now feels like a huge rally. We're at 4261. That'd be 20 handles from here. But we'll look at the market grid numbers for the daily here in just a second. The hourly, I have something up here, and the reason why they're up there is I want to show something to you where you see these numbers with the arrows underneath them here. That's the STX buy counter, and in theory on the hourly we got an STX buy the other evening on a sell-off, and now actually in the morning, it was early morning, and we're basically trying to consolidate here. This is potentially on the market grid configuration is very similar to one of these bubble bottoms I talk about, but there's going to be a ton of resistance. Now there's a number here. I'm going to blow this up just so you can see it a little better. And let me bring this over, but it's right here. It's 4297 is the pivot, and we went through that this morning. The algos actually picked up on the weakness, and we got two green bars here at the end of the session, and that formation that I showed you last night when the PPM is down at a low level and the forecast is for it to turn up. Those have been really good signals for trades, especially off the hourly chart, where you'll get multi-hour, 1 to 3 hour reversal type patterns that come up. And what it's suggesting right now, typical right into about an hour before London open, that we should hit a peak. If you remember last night, we were talking about the potential of hitting a peak around London. Where my cursor is right now was the London. It was the final green bar, and it was straight down for the rest of the session from that standpoint. So there's a couple of numbers we'll go into on the daily basis. I put out a number on Twitter today at the 4224 level for an intraday number. If it would have taken that out, we could have seen a easily 2% day down on the S&P. And that would have been a really big day, put us well down in the 41 handle, but we didn't get that. And it looks like based on a couple of things here, at least on the hourly chart, we get some recovery, but I'll show you here. In fact, let's go over to the daily. And this is the reason why I have the STX buy signal. I've talked to you folks about this before. If we get 5 STX buys without an offset, and this counts this, so we have 4 right now. We get one more STX buy signal without an offsetting RTX sell, then what we'll get is this, is we'll get the ultimate signal bottom. The last time we had this of 5, I'm gonna show you. We have to go back, and it was right here on September 29th last year, just a touch over a year ago. That was the last 5 that we got. And so now we're sitting here, we have 4 in this sequence. All of these 1, 2s, what this means is that there was one STX buy and then there was an offsetting RTX, and it resets the counter. And so, like I said, we need one more. If we get one more, then we've got a major low. And if we get an RTX buy, it resets and we got to start counting again. So it's so we'll see how this all plays out, but I wanted to leave that on for the moment. Let me just, I have to double click on this to get rid of this real quick. Okay. You can see there's a couple things I want to also point out. This is the 200-day moving average coming up underneath here. And this is an important fact, is that the 200 is actually in an upward slope. So it actually has an angle of attack 0.04. And when you get to these levels, it basically, anything over 0.02 is actually pretty bullish. Which it mean by bullish, I mean it's not likely to trade below that value. Right now, the 42.27 is that magic number. So that's kind of 24, 27 number. And we should hold this level and start a bounce back. What we're seeing here right now on the futures is, and this was something you may recall from last night, go back and watch it and fact check me if you wish. But I was saying that today should have been the final low of this pattern. We do have an uptick on PPM 1, PPM 2, and 3, all upticked, including the WaveTech or PPM 200 also is uptick. So it's a sign that we have a shot at moving back up toward the moving averages. But the 10-period moving average right now at 43.25, and let me get a drop here, a rate of change for you. It's about 18 handles per day. So all of a sudden it's going to be right at the 43 handle, and it'll be 42.80 and so forth by the time we get to the end of the week. This 42.80, probably between 42.75 and 90 is going to be a ceiling for this market at the moment. So just expect to see, the only thing that I've been talking about is the algos are suggesting that we're going to start to improve from here. So it makes sense, especially if Kramer's bearish on bonds, and then he must be super bearish on the market. So you definitely can fade him. But this, what's being told, the story that's being told here is that we should see a rebound from there. I'm just going to click over to the weekly. Wait, before I do that, let me stay on the daily. Let's do the market grid real quick here, just to get a feel for it. So market grid, yesterday we went, like I said, we went 42.65 was the RTX or the STX level, and you can see on the futures we closed just right at it, one tick below it. And so that does suggest that we should get some sideways movement. And I think I pointed this out. I remember trying to show you, these are hard to see, these where my cursor is here, there's some red dots here, and that number is 44.16. When that number was taken out, that was the pivot to the downside, and we've seen the market retest that 4400, 44.15 level, and then start to decline again. So we should see, based on the algos and what's being predicted, is that it was being predicted that we would see an uptick today, and it has done that so far. So that suggests we're ways away after Wednesday's action on Thursday, we should have an uptick. Of course, we're going to have the claims numbers and the continuing claims coming out on Thursday, along with some other metrics. So it's possible those are the things that could start to at least get us to stabilize here. I mean, as far as getting bullish, forget that, okay? We do have the potential here, and I'm going to draw this in, that we're trying to complete at least the first part of maybe of a more complex type pattern. But let me bring this up and bring the drawing tool up so I can show you. So we would basically like a ABC pattern here. We've got the 200-day coming in here. Maybe we get an X wave, another ABC. This thing gets tested again down the road. Algos are basically suggesting here is something like that. And the validity of the algos going that far out aren't necessarily that good, but they are a fairly good indication of this pattern that I just drew in that could occur as we go forward. You can see all the algos here. Now the 200 is flat, but like I said, over here it's a 0.045, and then everything's kind of just pointing up here from the standpoint of that everything is being forecasted to improve. That's not necessarily bullish, but it does suggest that we're going to stabilize here. And you may recall a ways back when these fib targets were coming in, they got negated here, but now all of a sudden it was forecasting that we were going to hit the 200. So we're basically hit it. We could print lower in the morning. So now let's go to get rid of this tool, and so we can. So what going back to the market grid here for today, or otherwise for tonight and into Wednesday, S1 42.48, 42.30 is S2. That's right down to the 200, right in that range. So we could see an S2, some follow through. And then on the upside, R1 is at 42.80. That's exactly that level I was just talking about. And 42.98 is R2 tomorrow. So probably looking at maybe some more downside risk and S2, R2, S2, R1, which would put us at 42.30, which would be a new low from today, and then 42.80. So I would watch for, if you print through today's low, look for a quick bounce out of there once we hit some of these numbers, and watch those hourly algos from that standpoint. We should be able to set up some kind of pattern there that's potentially going to set up a bounce. And now we got a lot of good things working for us. We got Kramer negative, right? So, but let's go ahead and so I'm going to go to the weekly just for a second, because this weekly 40 period moving average, I talked to you about the reason why when we were developing WaveTech back in the 80s that we used the averages that we did, because they roll down. So the daily 200 average is actually the weekly 40. So you can see right now the 40 is 42.51, where the daily 200 is 40. I think I just said it was 42.27 or 24.27 range. So it's a little bit lower the way that it's calculated, but they give you basically a range. So you could argue that this 42.50 down to 42.20 will round off these numbers. It's probably where you're likely to at least get a bounce. Doesn't mean that's going to be the low. It just means there is enough flowing there that it looks like we could get a bounce. If we look at the weekly algos here, this is forecasted, and I talked about this on Sunday night and last night as well, as we are getting a forecast that this is going to be the bottom of this pattern. these algos are turning up. You can see the dotted lines is forecasting for this market to rebound and start some kind of bounce. And it makes sense because we have PPM3 is at a 0.23, which is in trend mode. So we have a 60% probability that we stay above that number of, which is that 40 is 42.51. So I'm going to put it in a range of 42.51 to 42.20, 24. We're in that range somewhere. We should see the market be able to hold that upper angle of attack, should at least get us so we can bounce back into these weekly averages potentially. And I talked about this as well, back into just slightly above the 44 handle. That doesn't look like those numbers will pop up until maybe next week. So don't expect a big rally here, but we could, at 42.80 is going to be the ceiling for the moment. And possibly if after a couple of days of trading, maybe Wednesday and Thursday, we can figure out if there's any kind of conditions that would move us up. But I think we got a really good chance. I'm going to put like a 60% probability that we hold somewhere between that 42.50 and 42.20 level. That's going to be the bounce. And I see we've got somebody posting 42.44, 42.24. Those are good numbers in that range. Those are exactly where you want to watch. And what you watch for here, folks, is on the hourly algos to turn up, and you want to watch any kind of action around these numbers that look like you're getting a pretty significant bounce. And one of these days, I'm going to do a live stream during the market hours. So especially it'd be nice when there's some heavy news or heavy volatility out there to be able to show you how to recognize when you're getting that intraday bounce that is significant enough. And typically, all you got to do is watch for some type of bar on the hourly chart. I use, on the intraday trading, I use a 5-second chart with the algos on it. I use a 1 minute, a 5 minute, and an hourly to determine these turnarounds. And I look for the 5 minute algos to be turning up and the ones, and just see if everything gets in sync pretty good when these things are happening. You'll see the hourly algo about to turn up, then you look and go, oh yeah, look at the 5 minutes is projecting that we're going to cross through some of the moving averages and all those things. You start to see numerous events, and you folks know from watching this channel that I like these, what I call clusters of events that happen. And we've got a lot of numbers clustering around these levels between that 42, I'm going to round off 42.50, 42.20. These are major numbers. Database is blowing out, so that means there's not a lot of trending stocks to get the classic buy the dip. You need to have a reasonable amount of stocks that are participating in here, and you're just not getting that type of action or even have the context of having that type of action. All right, so let's go to the NASDAQ. NASDAQ is interesting here. This is the NASDAQ futures. We're getting one of those volatility spikes. And I talk about this. The market grid's a really great tool, folks, when you're watching, when you start to get these big volatility, you get an expansion. It's similar but different than like in a Bollinger Band, where you get that bubble-like formation. When Bollinger Bands are based on standard deviations, these are based on pure range volatility. And so when you start to see the range volatility expand, it typically tells you that we're making some type of inverse move, or a reversal is likely to happen when we get that. Now, we had one up here at these tops. We had one at these tops. Now we're getting these volatility bubble here. So what we'll look for here on the NASDAQ is if we do get a higher close tomorrow, then there's a good chance that we'll see the market grid turn up, and then what'll happen is that upward channel, like a minor upward channel, will start to flow, and that'll give you a little leadership, and at least from the thought, because part of being a good trader is actually anticipating where these markets are likely to go, and I try to give you that perspective every night, and all that. So yeah, I see George is all worried that I completely missed today's move again. Thanks, George. So anyway, yeah, what I was talking about last night was a trading range, a very, very broad trading range, and that's what I've been talking about for days. So you always got to have these guys that show up. Oh, he was wrong. I'm not trying to be right or wrong. I'm trying to give a perspective of where the markets are going to be in a range. And I believe within the market grid, we did talk about the potential S1, and that's why the market grid is there. So you can be guided. Maybe you should buy the indicators there, George. KendallReport.com/indicators. That'll help you out a lot. But the bottom line is what we're seeing here is really all we've done. If you look at we go back to Wednesday of last week. The low of Wednesday last week was 14,586. Yesterday's low was 14,714. This is the range that I've been talking about. We are just whipsawing within these ranges. The downward slope of the 10-period moving average is keeping that down. And what's interesting is the 10 yesterday was at, right now it's at 14,869, and we closed just below it. We traded above it, and now the algos are suggesting that there's a good chance that for today they're at 14,825. We're trading 14,713. So we're likely to start to push back up. And like I said, if we do get a higher close out of the indexes where it doesn't have to be anything drastic, that's going to be all it takes for the algos to start to go up. And I believe I said that today would be the end or the final day of the downtrend today. So we'll see if that plays out tomorrow. I think we could print through the lows of the session and then rebound back up. And so, but that's what the algos are telling us anyway. And they're still telling us on the 2140 that there's an absolute ceiling up here at around 15,000 on the NASDAQ. So we're not going anywhere, not bullish, not bearish. This pattern looks like, based on the algos, at least at the moment, that we should start to consolidate. I said the key to this market will be tomorrow's opening. When we come live tomorrow, when we get the open, whether we get the market grid to crank up on the upside. Real quick, I just want to touch on the weekly here. I think that's significant. One of the things we discussed is that this fib target, looks like fib target 2, which is 14,482. We got down to 14,651 yesterday. This is weekly, so last week we got down to 14,586. So we're printing right back down toward the lows of last week. And so, like I said, the algos are suggesting that this will be the final week down. Wherever the low is, we should hold the market grid, and we should hold that fib target 2, and we should start to see some stability in this market potentially as we come into next week. Yeah, so the PPMs, just real quick, I'm going to answer Steve-O. The PPMs and that's what's being forecasted right now. If you see here, we're starting to see some downward slope here on this, but it's turning up, and the PPMs are what is calculating in the SMA projections. So that's where you can see, well, it's turning back up. If you look, my cursor's over on the right hand side, it's showing that over the next week or so, the algo is actually suggesting that the moving average is turning up, and that's what's being forecasted on there. So I think we're really close here, folks. So there's some downward risk. I wouldn't be backing up the truck at these levels because there's plenty of negative trends in place from the standpoint. But I think the 200-day, the 40-week, all of these numbers on these indexes are going to end up to be pretty good. So and like I said, the same numbers here, this 4250, 4220, we need to see some type of action that confirms that maybe there's something here. Like I said, WaveTech database isn't helping. It's 92 out of 100 stocks have no trends. We've been declining for maybe I guess 5, maybe 6 weeks, where the database broke down many weeks ago, started selling. It's been very accurate on suggesting we're going to see some downside. Now we're at risk of seeing the intermediates roll over, which will actually probably put us into more sideways and potential more downside in the weeks to come. But I think we'll hold here. All right, so the Russell is also continuing to show a very negative, but we got down all the way to the STX level. This is the daily chart. All of these algos are suggesting that this is the final day down. As we come into Thursday, we should start to see a rebound, maybe some short covering ahead of the employment numbers coming out on Friday. Maybe there's some stuff coming out of the claims or the continuing claims, and there's some other metrics that are coming out at that time. So possibly we're going to see some type of rebound, but these are all big downtrends, folks. You got PPM1 here at a minus 0.55. There is only about a 20% probability to close above that value of that moving average. 1775 is that number. We closed yesterday at 1727. So that's a long ways from where we are, but it doesn't indicate until we get into, I've talked about this last night a bit, the second week of October is where we'll potentially have a bottom in place and maybe start to do some recovery work. But this is, there's nothing bullish here. All we're looking at is the potential to start to put in a bottom. And like I said, tomorrow will be key, folks. Tomorrow, when we come in here tomorrow, whether we can get a higher close on these indexes and actually get the a potential for these market grids to turn up and start to show some sort of potential bottoming pattern. But right now, this is a bottomless pit at the moment. But as I've said before, and this is classic, if you didn't have the algos here, basically these indicators would look about as bad as they can look at any given day, and that is the definition of a low. So that is it. So crazy numbers here on the 10-year, right? Here we are. High was 480.60, finished at 4.801. We closed above the extreme. What was being projected, RXT, was 4.76. We just blew through that, non-existent. One more day up, and then it turns down as well. So even so, it's got to be the perfect fade Kramer trade. Now he's negative at this level. But this goes to, as I've been talking about. Let me just adjust this scale. Been talking about, we have potentially higher yields all the way into mid-October. Then they are maybe starting to flatten out. We get around the 16th of October is when things start to, where the PPMs are forecasting the potential for momentum to fall off. Maybe we stabilize, but the moving average is forecasted to be, right now I've got my cursor where it will be at that level. It's roughly 484. And so if that's the moving average, that means we're probably going to be, hovering above that. We could even see some crazy numbers, 5%. I showed you the crazy longer term numbers of a six, I think it was 6.6% yields on the 10 years. And while that seems fairly crazy, I did that in last night's stream. So go there and rewatch that and scroll through. We mark the timeline up every night on these live streams so you can find what you're looking for fairly easy. Since I don't know all these symbols here on TradingView, since I'm a TradeStation guy normally, if you guys know what's the 10-year futures, I would love to put those up real quick. It's funny, Trader SLA, that you mentioned Peter Schiff. I'm always trolling them, making jokes about Peter. I went and watched his show last night. I scrubbed through it. And at least you guys get to see charts and hear technical analysis. You don't have to hear my same opinion over and over for an hour. Meanwhile, 250,000 views, so my hat's off to him on that. But why? Anyway, it was pretty bad stuff. Anyway, the everything that's happening here on this 10-year, so U.S. Is that right for the futures? Yeah, no, that's going to get me the yields. I need the future. I want the... Yeah, let me try it one more time because I would like to... Yeah, that's just going to give me the... It's the same as TNX. ZN, thank you. That's it. Thank you. Appreciate it. I just want you guys to see this on what this decline looks like in bonds. And just know that, once again, we haven't talked about it for a while, but the bottom line is that the depreciation that's happening across the board is just crazy, and that's why the banks are starting to come under pressure. I know usually my good buddy Dr. Baker watches. I was trying to reach out to him. One of the things that I'm really interested in, and I'll be trying to discuss as we go forward from a fundamental standpoint, is where these higher yields really start to affect the real big book of business, which is the maturity, and when we get a lot of rollovers. I think it's still a couple years out. I've been trying to research that, and what that means is that these higher yields are a ways off before it really starts blowing up the budget, or not the budget, the deficit. And then when it gets there, then you're going to see some ugliness. So eventually, Peter probably will be right, but as always, him and others, timing is really bad. But this shows you the decline in prices here, and it's pretty brutal from the standpoint. And that's why I wanted to bring up the futures. Let's go weekly. This might be even more revealing. Yeah, this will be even better. So we've got this is the weekly going all the way back to 22. So now you can see it's one thing. You kind of look at the yield graph and it feels bullish, right? Because you got looking at a chart that's going up. When you look at the futures here and prices, as yields go up and prices are going down, looks like we just hit fib target 3 here, just like on the cash. We're sitting here, and it does look like we've got lower prices coming, but this decline, I said, this really sets up a really drastic. Let's shorten the time. Yeah, this is even better. So now when you start to give it a monthly chart, this is how bad the declines are in the prices of the bonds. So not only do all the banks have losses, but the Federal Reserve, they're getting hammered. All of their assets are getting hammered as well. And so there's nobody that owns a bond or has a bond portfolio that is doing very good in this market. And on WaveTech, if you're a WaveTech user, you can go into our pre-built strategies under subscriptions on WaveTech, and you can see we have a bunch of, you have always used like these muni bond strategies for cash equivalents because you couldn't get any yield back in the day. Now you just go to T-bills. Our portfolio manager automatically calculates your returns on T-bills, but there's been no yield. So what we've had to do is find a place where we can get yield, and we have a managed strategy of these municipals that have been really good to us, but it doesn't own any of these things, and because there's no way to own anything in this type of environment. Now this is monthly. This goes back to 2020 where this peak was. It's just been straight down. So as you can see, we're way back to values back at 06, which makes sense because that's where the yields are back. And just a quick comment, I'm kind of got down this rabbit trail I need to finish, but I went back and showed you a while ago. I went back and we looked at the 10-year, and we went back into the 70s, and it showed that the 70s, somewhere between 5 and 7% is a pretty normalized yield. And I've been talking about yields being normalized. They are normalized, and I don't think these portfolios, their prices are being affected, but when they have to start to roll these over, when they start to roll out, I don't know what the maturity is on the Fed's balance sheet right now, and that's really, really big as well as some of the banks. But most of the banks, I'm hoping that maybe they moved them out of the hold to maturity portfolio and put them in a place where they can start hedging these things. So anyway, I think I'm done. Sorry about getting down that trail, but I had to finish it. Bear with me 1 second, folks. All right, just trying to get this scaled up right. So off to crude oil, we got that RTX sell signal back on the 27th, and here we are. I've been declining ever since. Looks like we're stabilizing. Still some downside here, and I covered this pretty pretty good the other night. I'm still looking at the potential for 85 to around 90 range setting up here and start to stabilize along these lines here. The 40 period moving average, this is a daily, is coming in right around this 86 handle. Let's go to weekly and you'll see what's interesting is we still have upward prices all the way into November, really into just about into year end. Then it looks like we're going to potentially start to roll over. We're seeing momentum fall off pretty quickly here. So this 10-week moving average, which will be the 40-day I just showed you, is very similar in value. The 10-week moving average right now is at 86.06. That kind of brings us to that 85 handle. I think we just climb along this 10-week moving average. I think the weekly is going to be the key to watch, but we're seeing momentum being forecasted to drop off substantially. So this little summer rally is probably it. And if you're trading XLE and that kind of, I was looking at the XLE hack that I built a while back, and it's got a little traction, but I think what we're going to see is some stability going forward into November, probably carry us through the most of the, from the, into the fourth quarter, second month of fourth quarter, and into potentially into year end. All right, so off to the Peter Schiff. This has made Peter very unhappy. He was even talking about his gold merger of his company and his failure to get his bank going when I was watching it last night. But we're down almost to the 200 period moving average. I've been calling for this for weeks, actually, and we're here. Also, just like with some of the other markets we're looking at, looks like there should be probably the low that we're getting this week should start some sort of consolidation or move back up toward these moving averages on the weekly chart. So we'll be looking at whatever we finish this week. The high low right now is 1864 down to 1830. I've been talking about a 24 handle. 1826 is fib target 1. And then we have 1819, which is the 200-week moving average. That is where we should end up finishing this. There's a pretty nice uptrend yet. And if you look at the PPM 200, it's actually losing some of its momentum, but it's at a 0.10. That's incredibly strong. These metrics from the, excuse me, the metrics from the 200 is actually a little bit different than what we see in the other moving averages. But this is, it's fading, and it looks like it's going to continue to fade. So we probably hold along that line and end up getting sandwiched between the 200 and probably the 10, which right now is 1928. So we probably get hammered down between, we're going to call it 1820 to 1920. We probably get into a range like that if that's how the year end looks anyway. But once again, we have the same formation on a whole bunch of these charts here, as we've got the PPMs turning up. PPM 1 is forecasted to turn up next week, which is perfect if it turns up here around that 200-week moving average. All right, so finally, Bitcoin. Bit of a reversal yesterday, got up to RTX. We got up to, the high was 28,592. RTX was 28,612, so we get right up into there. Reversal, we trade all the way down to actually STX level 27.3, low 27.5. Let's see, low 27.3 actually. And now as we look at today, this is a daily Bitcoin. We still have a little bit of a positive uptrend on the 10, so 26,893. That should be a pretty good number. We look at the market grid S1. S2 is actually 2780. 26.8 is S3. And we should hold that 10-pair moving average and probably consolidate here a little bit. Let's take a look at the weekly. Weekly got above that 200 week. Let me fix this scale. Got above the 200 week, but right now is just sandwiched right down between the 40 and the 10, and those numbers are 27,062, and the upside is 28,69. So basically, we got about $1,000 range. This upward slope that's being forecasted should hold. I don't see a disaster, even though we got fib target 1 on the downside, 25,539. We actually tested that a couple of weeks ago. I don't see that being retested this time. Looks like more of a sideways to up type pattern. Okay, folks, that's going to do it for tonight's video. Thanks for hanging out. And yeah, I think we've got quite a bit of things that are going to come into focus in the next 2 sessions. So tomorrow's going to be critical coming into Thursday. This should be the final day of the lows of this pattern. If we'd have to close below that on the basis the S&P, below that 4220 level. If we did that, then there could be some pretty serious issues going on. But I think we'll see things at least start to stabilize as we come into tomorrow. We've got the ADP, we got some other stuff coming out. We'll see how all that comes out and see how the markets react. So just remember to hit the like button, subscribe, all that good stuff. And also, don't forget, if you are a previous owner of our suite of indicators, you get a really super deep discount. If you go into kendallreport.com/indicators, you get, there's still a customer appreciation discount. It's a huge number. And I think it's close to 60 or 70% if you bought the first suite. And there is a special going on right now. You can get a 30% if you haven't bought for the all 19 indicators, the course, the whole bit, and you'll get 30% off by putting in Kindle 30, and off you go. So anyway, folks, thanks for watching. See you at the same time tomorrow night. Thanks a lot.